All attendees are in listen-only mode.
Well, I want to thank everyone for coming, especially on this Saturday, especially after what happened on Friday where the stock market was down in the U.S. about 200 some odd points. Pretty ugly day. And that brings us to the point of what's so important about having a trailing stop, or what I'm calling it is my trend rider indicator, which I had written about in 1998 in Stocks and Commodities magazine. And I'm looking at some of the names here. I see people pretty much, well, from pretty much all over the world. So I greatly appreciate everyone taking time out on their Saturday afternoon to learn about trading and trying to improve their trading. Before we start, I want to give a proper disclosure. Let me jump down to that, if I may. Be very clear. Let me get rid of this. That trading of futures and options, and also I want to say stocks, involves substantial risk of loss no matter who's managing your money, and it's not suitable for all investors, and past performance is not necessarily indicative of future results. So without a further ado, let's we're going to start talking about let me get rid of this. Oh, 1 second. We're going to start talking about the actual indicator that I had written about. But actually, before I do that, I want to ask a very general question to everybody. And I really appreciate if you can put up your hands. I want to hear people's opinions. And this is my question. Do you think analyzing or superior indicators or systems make you a better trader? And here, let me see some of the responses. Overwhelmingly, yes. Well, I'm going to be the sad messenger and saying no, that this is only part of the puzzle, the analyzing and these indicators. There's really three basic premises of over time or being a consistent trader. One of them is having a simple, robust methodology, which part of it I'm going to delineate to you today. The other is exactly having a proper mindset. And a proper mindset, or an emotional, I'll call it a repertoire. It's how you think. How do you feel after you have trades in a row that don't work? Because I promise you that's going to happen. The other major issue is how you accept your trades that do work and how you accept your trades that don't work. And how do you feel after a series of losing trades? I mean, because a lot of times we emotionally disrupt our trading by not thinking properly. And then the third aspect, which is extremely important, is that you have risk management. And with these indicators that I'm going to start, well, I'm going to tell you about the what I call it, trading the trend indicator. But you're going to have overlapping indicators, but you're going to have overlapping levels of risk that are going to offset each other and try to, I'm going to say the word underline, try to mitigate your drawdowns. But the reality is we're dealing in uncertainty. We're dealing in the unknown. You are going to have many trades that don't work. You're going to have many trades or series of trades that you're not going to make money on. But this is the reality of trend following. I mean, I'm not sugarcoating anything. I'm not trying to mislead you. I'm not trying to make it uglier than it really is. But you know what the reality is? It's not easy. And I'd rather prepare you ahead of time to tell you how, let's say, challenging it is, as opposed to in the middle of your trading that you quit and stop. Because the reality is 90-some-odd% of people, maybe even higher, more than 95% of people who attempt to trade fail. And my goal is to put you in that 5 or 10% of traders that are successful. And I'm going to qualify that. That means successful over time. This is not a get-rich-quick, that this is a process, and that where I want you to get to is think about that the whole key is being consistent, and that your money is going to be made over a long series of trades, that any one year, any 1 month really don't mean anything. And really what the goal is over 10 years, how'd you do? Were you able to 4 times your money or 5 times your money, which means a 15% compounded annual rate of return? or over 15 years, it means 8 times your money. I mean, that's how I want you to really think, and that's really what my goal is. So really, I mean, before we even get into it, what I want to pose to everyone is, and you can post it here. I can see your questions, or you can email me, and that's Andrew@trendfollowingmentor.com. But what I'd really like to know is, what is your biggest, or what has been your biggest challenge or problem trading? And I want to help you. I want you to be able to overcome it. And if it's, I'll be very honest with you. In the beginning, when I first started, I was looking from one indicator to the next indicator to the next system, thinking that the more analyzation, the better, and the more money I'll make. And that wasn't the case. What I really learned, and once I learned and actually started making money, was there is no holy grail, there is no magic system, there is no magic manager, and that simple, robust ideas work with heavy risk management, which I teach in my course, which is very heavy on risk per trade, risk per sector, open trade equity risk, and numerous other attributes of trading. And then the other idea is that one really needs to think correctly and almost be separate than their trading account. That when you make money, okay, you don't get excited. And when you don't make money or the trades don't work, you don't get excited. So what I really want to do is I offer myself to help you to overcome your trading problems or your biggest challenges, because I really do believe I can assist you and help you. So one more last issue, and then we're going to actually start looking at some charts. What I'd like to offer you is that if you're interested, you contact me. First we talk. It doesn't cost you anything. But if you decide to actually take my course, and on the first, let's say, consultation, the first hour or so that we're going to speak, that if you're not satisfied or you don't think that I'm going to help you get to your goals, you get all your money back. So you have an absolutely no-risk situation to see if I can really help you. And that's really what it's about. I mean, my goal is to really make a difference in your trading, and I've been helped, and this is my way of giving back. And exactly the same idea with even this webinar. I'm giving you ideas that I teach in my course. So anyway, let's jump to this. The whole idea of trading the trend, it was an article that I wrote. It's in Stocks and Commodities magazine. Everything is detailed. It was written in October of 1998. I used this idea today. I've been using this idea, and it's based on a trailing stop. And really what I want to show is that it's not magic. Basically, it keeps you in the trend when the trend is working. I mean, let's say if you're in an uptrend, or if you're in a downtrend, it keeps you in that downtrend. Before we even start, I'm going to try to minimize this a little bit. It's like the S&P 500, and this is also what I wrote about in my blog, that even though we were hitting new highs here, you had tremendous divergences. And a divergence means that the market is going up, but the MACD, which is an indicator, which is not magical either, but it's using groups of indicators or groups of risk management concepts that give us a picture of what is really going on here, that the MACD was failing or weakening, yet we had new highs. And that was a red alert. And I wrote about that, and it was about in April I wrote about this. And for those of you who watched this or actually read the post, and you can go back to my blog and see it, it was called MACD Divergences, you would have avoided a lot of this ugliness where we went from the, well, let's say here, from the 1400 range to now we're at, well, the 1280s. And that's a big drop. Again, what I first started to say is I use series of indicators, and I put it together as a package, or as I'd like to say, is almost like a conveyor belt of ideas. This trade the trend idea is just one of them. And using this simple indicator, and we're going to go to a couple points. This is a spider, that you would have been in to this huge move to the upside from the end of December. You would have seen it all the way, and you would have gotten taken out here. You would have noticed that there was a divergence. this choppy period right here, and you might not have gotten back in, which I wouldn't have suggested, but at this point right here, you would have been either out of the market or you'd be even contemplating going short. And that's another issue. I've gone short. You can go short, you can go long. You don't have to just make money on the upside. There was a tremendous amount of money made up this way where you would have bought, and I teach this, you would have bought the strongest stocks, and you would have, you wouldn't even have thought to be going short. And going to go to the next chart is Apple. You would have made a nice chunk of money buying the strongest stocks, and at that point, one of the strongest stocks at the time was Apple. And then you would have exited using this right here, this trading the trend line. It's very simple. I give it to you when you take my course. If not, it's even detailed on the trading material or actually the material in the article that you can download or read. Again, it's the October 1998 Stocks and Commodities magazine, and it's free for the taking. So this is the first chart, and you would have exited from here, the S&P 500, from about 1369. Look at the difference. The MACD is another indicator which we use, and that's confirming that you don't want to be involved in this nonsense. You would have either want to be short at this point or out of the market. So this is one chart. Let's go to another chart that I have already here, Apple. What I started to say was if you had gone from December, right here, you would have noticed, then what's that I teach also is to try to buy the strongest stocks, that Apple was one of the strongest stocks back here, that you had all the lineups or this, let's say, conveyor belt of ideas that let you take this trade to buy Apple. And you would have gotten in approximately here, let's say at $400 range, and ridden it up just about to here, a little under 600. That's almost a 50% return. And using this simple concept, you buy the strongest stocks, put on a low-risk trade where you're looking to risk. What I suggest is you don't risk more than 1% of your account. And I teach you how to figure exactly, what is 1% of your account, where you have your initial stop and then you have a trailing stop, because that's exactly what this trading the trend line is. It's a trailing stop. And again, I want to say this. It's not magic. None of these indicators are magic. The MACD itself is not magic. But you take all these pieces of the puzzle, the MACD, the trading the trend line, you take the proper mindset that you take every trade that you're given. You don't pick and choose because you're afraid or you are greedy that you want to take more, or you want to be right. You take a quick profit so you have patience. It's a whole package, and this is really what the key is that I try to instill in my students. And this is what the idea is. I want to reiterate, no magical indicators, no magical system. It's a process based on three major pillars of ideas. One is your emotional thought processes, which I help you work on, which are the fears, the greeds, the emotions of being right. There's no such thing as being right or being bored. I've had students that exited profitable trade because they said, you know what, I'm bored already. I made some money. But I told them, I said, you know what, you have to let your winners run. This is like the biggest idea about trend following. You have to trade with the trend. You have to cut your losses short. You let your profits run. And you don't let the big profits get away. And again, with this student who told me he was bored, he let the big profits get away. And again, like I just showed you with Apple, that was about a 50% return. This is what keeps you in the game of trend following. Trend following is tough. You're going to have numerous times you're going to have small losses. You're going to also have periods of time. Let me give you the four possibilities. You can only have big losses, small profits, big profits. We use a series of risk management to avoid the big losses. Or let me say it like this. We attempt to avoid the big losses because, again, we're dealing in uncertainty and the unknown. Things can gap. Anything can happen. So we are attempting to do this. And then the reality in my trading has been I have a ton of small profits. I have a ton of small losses, which offset each other, which really don't mean anything to me. I don't get excited either which way. And then I have a rare time I end up making a lot of money. The example could have been like this apple. If you had taken this apple, vis-a-vis the rules that I talk about. Again, I want to reiterate, it's a plan, it's a process. Don't even think to be invested in anything, the stock market, the commodities, forex, unless you have a plan. If you don't have a plan, the only thing I can promise you is I guarantee you will lose more money than you've ever anticipated. And really, this is what my goal is, to try to teach you what I've been doing for the last 18 years. I'm going to jump to another chart, and then I'll take your questions on some of your charts. Here, I'm in this trade right now, DeVry. And again, wasn't rocket science. It was one of the weakest stocks. And you can see, let me just fix this a little bit. 1 second. And ka-ching. You can see, let me make it a little bit bigger. This has been a long-going trade just going on down. And this is what the whole idea of what a trend is. You follow the trend. You have no opinions. You just let it go. So what happened with DeVry? It was one of the weakest stocks. I was able to put on a trade that was risking less than 1% of my account. So let's say if I have a, just for simple numbers, a $100,000 account, I wanted to risk no more than $1,000. And then I figured out how many shares I can do that with, and I just say, okay, great. Let me see how much this is going to cost me to see if it'll work. Not that I thought it was going to work, because I believe any trade is 50-50. And then I went through my, let's say, conveyor belt of ideas. Is it a low-risk trade? A whole list of if this, then this. If this, then this. And it gets to the point, or it got to the point saying, yes, I can take this trade. And the fact is, I'm in this trade. We'll see where it doesn't work. And to me, it's very simple. If I surpass this 28.51, or I'd give it a couple ticks above it, thank you, I'm out. There's nothing to think about. And really, this is what trading is all about, that you have a plan, you follow the plan, and you're consistent. And you want to be consistent over time. Okay, I want to see if there's any questions at this point. Bear with me 1 second, everybody. Okay. Paul from, he's asking a question that he wants to know that what does Google look like? So here, let's put up Google. Whoops, let's see if it works. Try again. Okay, here comes Google. Well, first of all, and this is what first thing is, look at this gap here, like we're talking about gaps. But before you do anything, the whole idea is you only want to buy the strongest stocks. So I don't have an opinion, about Google, because, first thing what I do in meta stocks is I run an exploration, and I rank the stocks that I look at. I want to buy the strongest stocks, and I want to sell the weakest stocks. So just picking a stock at random doesn't really tell me all that much, but I can tell you for one thing for 100% sure, I would not want to be long Google at this point. There's numerous reasons. Simplest reason is I'm below my trading the trend line. My MACD is negative, and it's probably not one of the strongest stocks. So, you go through a series of, ideas if you should be in a trade or not be in a trade. And so that, that's the first one. Here, I have another. Let's look at this stock. It's, let's see what this is. Oh, 1 sec. Okay. Now, just from even what I'm just saying, and you can actually see this very, very clearly, should I be in this stock, should I be long it, or should I be either out of it or even short of it? Okay. Well, put it this way, real simple. I wouldn't say that I should be short at this point because I want to compare it to the universe of other stocks. And also I like, if I'm going to be going short, I want to be going short a stock that's hitting a all-time low or a 52-week low, because I'm not the only one who's being negative on that, and there's less, let's say, potential that it would continue to go back up. But everything is lining up. I look at the market first, and that was one issue that I looked at the S&P 500, was if I'm below a 200-day moving average and I have this divergence, I'm not looking to be long right now. I'm looking to be short. And I'm trying to put on low-risk bets, and I'm trying to sell the weakest stocks. Reality is this stock's not really hitting a 52-week low. I can see it right off the bat. I want to see that it's weak, but there's no way I'm going to be long this stock. If anything, I'd be out of this stock, and I would have exited here. Would have had a nice profit, would have gotten in here if it was one of the strongest stocks. And for some reason, I believe this was part of the IBD 50, which I do look at. IBD 50 gives me a good idea of the strongest stocks. And you would have had a nice little run. And that's what this is all about, trying to take low-risk bets and letting the trend tell us what it wants to do. And you can do this with stocks. You can do this with commodities. You can do this with agriculture. You can do this on any time frame, intraday, dailies, hourlies. You get to pick it. Let's look at another stock. Let's go here. Hang on. I just got this one. Oh, JP Morgan. With the whale and the MF Global nonsense and all that other good stuff. First of all, you can see that I had a signal that I wanted to be short from here. You can see it right here. The MACD was decreasing. And I'm also below, starting to get below this trading the trend line. But let's tighten it up a little bit. Let's see what's going on here. Well, I'd like to see a confirmation of numerous ideas, but it's pretty much of a no-brainer. If I was long this stock, which would have been also from December, which is a nice move, from 31 up to, I would have gotten out here, just by following this. It's about a 30-some-odd% return. Nothing wrong with that. Beautiful. And then I only want to buy the strongest stocks again. And that's what this is. Let me just show you this real quick, where I have trend ranking, and I explore the strongest stocks. And I always look, I try to look at the IBD 50, because that's what makes it a lot easier for me as far as detailing the strongest stocks. And for the weakest stocks, or actually the weakest stocks, I want to look at 52-week lows or all-time lows. And obviously this is not at a 52-week low or an all-day low, but you know what? Let's go back to DeVry. That was. You can see here. Then you had a rebound. That was your signal. And you watched. And here you go from here. You can see that it was at a 52-week low, and it was at a low, multi-year low. Is the kind of stuff that you look for. So, let me put this back. Let's see if there's more stocks that people want to look at. Hold on one second. Okay, Bank of America. Again, pretty simple. You have an idea to exit your long here. And then from this point on, from $8.30 some odd cents, you don't want to be in this trade. If it was one of the weakest, you want to be shorted. And it just follows this line. If you cross this line, you're out. It's very simple. It's very easy to do. So let me kind of wrap it up a little bit. I need to get some work done for Monday. If any of you have other questions besides, asking me what I think of any stock, it's like almost like Kramer. But, what I do is I teach you to do this yourself. My goal is to help you improve your trading. I want to be your mentor. I want that you send me all your trades. This is one-on-one. This is very personal. And then even before that, everybody has some kind of an issue, what they haven't, where they've struggled with their trading. So what my goal is to try to help you get over this idea or what your problem trading is. And you can trade from the long side. You can trade from the short side. I'm going to clarify something too. Probably make more money on the long side, but there's tremendous profits also from the short side. To be short, stocks, or you can even do, let's say, euro dollars. I mean, that's been a great trade. But the fact is that you're not limiting yourself to any idea. You're not being at the mercy of the market. You're taking control of your destiny and your family's destiny by being your own independent trader. And I'm here to help you one-on-one, myself. I also have some colleagues that can help you also. But you can request to speak to me. I'm here to help you. And really what I want to say again is that what I'd like to do is offer you a no-risk trial. First of all, you can talk to me for free. You set up a time, you email me, we'll chat, we'll discuss how you've done, where you've struggled, and whatever. It doesn't cost you anything. It's fantastic. I wish someone had done that for me when I really first started, even though I did have help. But it took me a long time to really internalize this help. And then if you want to take my course, basically it's on a risk-free trial that we start. And the first lesson, if you're not satisfied or you don't think I'm going to help you, then I'll refund all your money. This is what trend following is in a nutshell. That you're going to have a lot of trades that don't work. You're going to have a handful of trades that do work and make you money, that make your year. It's not easy. It's not retirement in the box. You have to be committed. You have to be disciplined. You have to be patient. And that's why I say I want to be your mentor, your coach. Because to do it on your own, it's really tough. The fact is, you can do it on your own. You can probably make every mistake possible like I did. Or your choice is to have me there, available, to help you, and try to shorten your learning curve. And that's what this is all about, that I'm here to hold your hand and to help you. Again, my name is Andrew Abraham. It's trendfollowingmentor.com. I invite you to download. There's a 40-page book that's on my website that I give you for free. I have a book coming out with Wiley Books coming out in the fall called The Bible of Trend Following, that there's money managers that I've sent it to that are managing hundreds of millions of dollars that said they wish they had read my book before they started. It would have saved them a lot of money. Again, it's not the Holy Grail because it doesn't exist, but it's something that I really urge you, if you really want to be successful trading, to pick up. And more so, I'm here to help you and to shorten your learning curve and to help you compound money over long periods of time. Again, it's not easy, that it takes a lot of hard work, a lot of patience, a lot of discipline, that you are going to have series of many losing trades, but that's okay as long as we keep them small. And my goal is to help you think like a successful trend follower. Again, thank you very much. I greatly appreciate it. This is Andrew from Trend Following Mentor.